Good morning, everyone. Welcome to the European crossover webinar. And we just got the Eurozone flash PMI that came out. You can see here it came in at 48. That was the Reuters poll. Came in at 47.8. Let's see here. They're expecting a little bit better, so it came in just a tad bit weaker. Euro had already made a little run up here on because German PMI wasn't maybe as bad as they thought it was going to be, maybe. Because as I mentioned here, we know how terrible it had been. Been all the way down to 44.3, but well below contractionary mode. We did have French flash PMI come in at 53.1. This was really nice. I mean, because it had already been above contractionary mode, and so we really had a pretty nice little run up in here. Reuters poll was for 151.5 to hold on and look at it, 53.1. So doing much better, obviously, than the German PMIs, which have just been in the absolute dirt. Going to, as I mentioned, the Eurozone PMI, once again, 47.8. Reuters poll was for 48. Moving in today, we do have retail sales at 8:30 as we move into the U.S. session, and we do have flash PMI, market flash PMI at 9:45 Eastern. I think we've referenced this during the daily wrap-up. We were going over the reports coming in, and if the euro was going to have any weakness, I said we may kind of pare back a bit, going ahead of the PMIs. But I said, hey, if the PMIs come in okay, it actually is going to push the euro higher. We have gone higher. We're giving up just a little bit here. We did come right into this 78%. You can see right here, the 1312. Let's go move this out of the way. Well, we mentioned here that this is the target that we're looking at before the market will take any type of respite realistically. And that's the 1372 here. Let's move this here. We mentioned about, we may see a bit of a respite around, just a pause. I said 1328, but in all likelihood, this market wants to go to 1372. And to be careful, because we could even pop back in here to this old 1389, which was an area that we thought at this time when we were making the run here that we might be able to jump up there and grab that. But obviously we did slide back. The euro's holding up obviously very well. Like I said, to me, it's and I think that's coming to fruition. A lot of people saying all the troubles and woes of the Europe and look at Draghi. Draghi threw his own monkey wrench, knocking the euro lower. But look, it's still holding up. And it's not so much, as I said before, so much that it's all things look so great and rosy in Europe. It's just that it's just dollar liquidation that we're seeing here. And but the actual real selling, if you ask me, some might think, okay, dollar liquidation, please don't state the obvious. And that's not what I'm referring to. This is dollar liquidation of just longs, okay, of existing longs. This isn't real dollar selling. As I mentioned to you before, if you saw me on the daily wrap-up, I had mentioned, there were several big fund managers or uh, and key traders that were looking for a fallback in the dollar. One of them was Paul Tudor Jones, who was expecting the same thing with the rate cuts. Not that that necessarily would have been a rate cut this time, but that's what the market was looking for. And he said, "Hey, look, in that environment, you're going to go in and sell dollars." And that what's his name, Raoul Paul, he's expecting a rate cut too, and I think he's like long like a whole buttload of Eurodollar futures, but that he's long the dollar, and he's actually been talking about this for about the last 2 weeks. And this last weekend, he went on the Twitter thing and was talking about a trade, and he was talking about how he thought the dollar would in turn eventually go up. We get this rally, okay, and to me, I was thinking that doesn't even make any sense. And eventually he was right, the dollar rallied, but what he didn't point out was in anticipation of that cut in 2001, the dollar had fallen 1,000 ticks before the fall. 1,000, not 100, 1,000. The dollar index had moved from 118 to 108. And then the Fed cut in early January. The dollar fell still some more. Eventually, the dollar rallied. But like I said, in the long term, we're all dead. Meaning, like I said, the old economist saying, in time this, in time this, yeah, but eventually we're all dead. Well, like I said, this is, like I said, thinking, okay, don't state the obvious, dollar liquidation. This is just dollar liquidation of the existing longs. This isn't real dollar selling. That was my concern is, and Blakey mentioned that, but be careful not to get in the way. Look, as I mentioned, the dollar index presaging that cut that he was referring to, because he mentioned that the Fed goes into a series of cuts. Hence, my thought has been, like I said, this data has been getting weaker, and that the China thing, even if it gets resolved, has been a big drag over the economy. Not to mention all Trump's tariffs against everybody, including the dog sister, cat uncle, and the dog catcher down the road. He's got a tariff against everybody, but it's weighed on the economy, and so we're expecting additional rate cuts, not just one in July, but furthermore. But as I mentioned in the roundup, if you looked at 1,000 ticks, okay, well then you're looking down here at 88, okay, because that's what presaged the cut, was moving the dollar index of 1,000 ticks. So we're Raoul Paul, and I certainly don't consider myself anywhere, not even close or anything to that guy. But I'm saying the guy's like long dollars like crazy from right up in here. He called it one of the biggest trades you think you've ever seen. I'm like, dude, I mean, I went back this weekend and I went down to 2001 and presaging that cut, like I said, the dollar index was at 118, fell all the way down to 108. We got the cut, dollar slid just a little bit more, kind of held its own, bebopped around, eventually did rally. So that's what I'm saying, you got to be careful. We're seeing some existing long liquidation. We're not seeing any real dollar selling, okay? Henceforth why, as I mentioned, we can still push much higher. And what I was suggesting is be careful with the euro, because I don't think that we're going to go in and see any real pullback in the euro, and not because the euro is so great. It's all dollar related. This move has nothing to do really so much with the euro. So, I mean, you're going to trade the euro, which I'm trading the euro. We're going to trade against the levels, but like I said, this is all about the dollar selling. Why you have to be careful, because this thing could take off. And I was saying, hey, if you want a target, there's your target. It's going to be 1372. That's where I think they're going to go to. But if you're hell bent to short this euro, other than some scalps, and I've done some scalps, really, if you're looking for a little bit more than that on a sell, I really wouldn't be touching this thing until it comes around 1389. Other than some scalps, as I said, I mentioned there may be a pause, probably around 1328-ish. But like I said, this is where I think they want to go to and potentially stretch up in here. But be careful getting in the way of this, because like I said, matter of fact, I will go on and take this just to go on and didn't have enough time to the daily wrap up, but I do want to go and touch into that. So let's go on and get into this real quick. Okay, here's 2001, and this is the move. And go. Prior to that cut that we had seen that he was referencing about, we saw the market going and fall off from 118. You see that? I didn't hear. Fall down to 108. You see that? I mean, the moves are so huge that it doesn't even look like this. Looks like probably was like, I don't know, like 200 pips, ticks or something like that. No, we had fallen from 118 right before that cut, and the market fell within, I think was it 8 weeks or 10 weeks, all the way down to 108. So we lost 1,000 ticks. So eventually the market did rally. He's correct. After the Fed cut, then we started moving higher because he's saying, "Oh, I'm going to see this big rally in the dollar index." But what we didn't understand is prior to that, because he's already long the dollar in a big, big way. Prior to that, leading into the cut, which is where we're at right now, the market lost 1,000 ticks. Now, I don't think the market is going to go and lose 1,000 ticks, but I'm just saying is we're just liquidating some existing longs. That's all we've done. So there's a lot more room for this thing to fall. And that's what I'm saying. Be careful getting in the way of this thing. But anyway, enough of that. Just want to go and make that point. Let's go move into the news. We already spent some time, but markets are relatively quiet. It's been a fairly inconclusive summit in Brussels so far. Leaders failed to agree to who they want to take over the running of the big institutions, with one clear outcome being the next head of the European Commission will not be the German conservative Manfred Weber. There was agreement to have to go another breaking deadlock on June 30th. Perhaps more significant, the bloc has also failed to take leadership in climate change, as a number of largely esteemed nations blocked a commitment for the zone to be carbon neutral by 2015. In the end, that aspiration was relegated to a more footnote in the summit communique. That hands a propaganda coup to the departing EU member Britain, which had just committed itself to a similar target and is now bidding to host the 2020 UN climate talks. Today, the summit agenda turns to the equally knotty subject of dependency policy integration in the Eurozone. Let me see. I don't want to spend all the time on a bunch of politic junk. Central banks have been set the bulls running, and President Trump's trying to curb them. He had apparently ordered missile strikes on Iran, according to the New York Times, then rescinded the order at the last minute. But more likely, this is just another breather after a rally that's just taken bond yields to record lows and some equity indexes to record highs. So, with world stocks have been pulled back today after those days of gains, after seeing the S&P 500 and Dow Jones each reach record highs last night, the all-country index is still on track for its third week of gains. It's coming to the end of an eventful week. First, the ECB's dramatic plot, then the Federal Reserve, or less, confirmed it would cut rates in July. The Iran tensions mounting, and the leadership in the UK dragged on, flash PMIs being out. Japan has already posted data showing manufacturing contracted again in June, and new orders fell to their lowest level in 3 years. And as China's slowdown in trade wars was taking a toll, and that's what I was talking about. And you know why? Some people were indicating, hey, the data's not bad. Look, the Fed doesn't even wait till the house burns down. You start to cut rates, and you reach out you call the fire department when you smell smoke. You don't call the fire department after the house is burnt down or after the house is fully in flames. Hence, my thought was, some people want to see the data completely at zero, and now you can have the Fed cut. And that's what I'm saying is the data has been weak for the last 2.5, 3 months, almost all the data. With exception of retail sales, but it's all been weaker now. To what extent weaker, you can make different cases, but once again, it has been weaker from the preceding data, which was weaker from the preceding month's data. German manufacturing may register a 6 month of decline, which it did. Actually, it rallied just a little bit, just a bit. So despite equity gains and stimulus hopes, it's really more of a market for bond bulls. U.S. Treasury yields remain near 2%. Bonds aside, safe havens are very much in favor. Gold's above 1,400 to a 6-year peak. We did go and pull back right now on the gold market. And we'll go and take a look at that real quick. The dollar is set for a weekly loss against the basket of currencies, and if the weakness is sustained, June could be the first month in the red after 4 in the black. Sterling's at a 2-week high versus the dollar, apparently paying little attention to the news from the PM leadership battle, where Boris Johnson is widely considered a shoo-in. Aussie dollars back from the brink. Both were. We don't want to spend too much time in here. Just that back from the brink. Let's see. That led to a bumper week for bonds. We already know that's no news. Focus now switches to the Reserve Bank of New Zealand meeting on June 26. Let's see. RBNZ applies a 31% chance of a quarter-point cut. The balance of risk is involved in the direction of another cut. Mainly due to global developments, but not so emphatically that the RBNZ needs to appear panicked by cutting the OCR. Let's see, gold hits a 6-year high on central bank stimulus hints. We already know about that, but we did get above 1,400. We've gone and pared back. Global wave of monetary policies easing has the impact of pushing global bond yields lower and is a key positive driver for gold. We maintain our bullish call for gold, and it looks like our mid-2020 target of 1450 may be reached much sooner. And lastly, let's finish with the dollar. Dollar struggled on Friday to get on the firm foot and was poised for a weekly loss against major currencies. The focus now shifts to where the United States and China can resolve their trade rout at a group of 20 leaders summit in the western Japanese city of Osaka next week. Dollar selling is not broad-based yet, and that's my take. Yet. Dollar selling is not broad-based yet, but the move in gold shows speculative intent to test the dollar's downside is increasing, said Yukio Ishizuka. We have to wait for G20, but it's difficult to envision a decisive outcome. That will be a chance to put on the positions on new positions to sell the dollar. The dollar traded at 107.11 Japanese yen, but at one point fell to a 5-month low of 107.04 as Fed Jerome Powell signaled the central bank will cut rates at its next policy meeting in July, continue to weigh on the dollar. Powell's rate tilt joined the Fed with global peers such as the ECB and the Federal Bank of Australia this week on a path toward more policy stimulus to maintain economic growth. Some hedge funds were surprised by the Fed's dovish stance. Really, I don't know. I don't get some of this. By the Fed's dovish stance, leading to an unwinding of dollar long positions built up before its meeting on Wednesday, analysts said. So let's go and move on to the bias chart. I mean, I guess some people probably want us to be in a depression, and then it's okay for the Fed to cut. Look, I'm not a fan of whether the Fed cuts or doesn't cut. That's just the reality of the situation that, that they were going to reference at, essentially laying the table or setting the table for July. So here we are with the euro. It's holding up very, very well. I mentioned this yesterday, gone to head. I mentioned this yesterday was that this reminds me of the dollar index from, 2.5 months ago. No matter where you bought the dollar index, if you bought on a breakout and you were wrong, bought on a dip, you were wrong, but bought whatever, and wrong in the sense that it immediately went against you, it didn't matter because you were going to get paid anyway. And that's been the case of the dollar index over the last 2.5 months. You wake up in the morning, scratch your head, open your eyes, and just hit the buy button. And you're going to get paid in the dollar. It was, there was just no doubt about it. You'd get your money back. Well, in a sense, flip it the other direction. And, maybe a bit of an extreme talk, but I'm just saying is that the euro, it just keeps finding a bid. And it doesn't want to pull back. And I mentioned this from the day before when I was looking at it in the Asian session. And from a scalper's point of view, I'm like, man, this thing just won't pull back because I was looking at the dollar index trying to move higher. And even though the euro comprises 56.4%, the dollar index simply wouldn't pull back. So I was fortunate able to get out with a few pips, and it took off much higher as we came in yesterday into Europe. And, grabbed a little bit and still pushed higher. And then fortunately, like I said, played around with it, came out okay, but you got to be careful being short this thing. If you want to short it, if you short it with a very, very tight stop. Next target I said is, this is a target up here at 1372. There may be a pause at 1328 right here, but for now, we're going to move this to 1343. I think this is the overall target for bulls to go to. Doesn't mean they won't stop and push higher. I'm just saying this is where you'll see where you can see some liquidation here. But if they're going to go anywhere right now, it'll be 1343. But I think we'll hit potentially we could go to 1372 today if they unleash some further dollar selling as we go into the end of the week. But we'll want to put it here for 1343. For now. I'm actually going to go here. There you go. And support. $12.67. I mean, we can go and pull back. I'll tell you what, there's going to be a nice an undertone bid on this market. So that's what I'm saying is, I picked this up yesterday as it was falling back. I had 1274, and it fell back. And I'm just saying is, wherever you pick it up, even if it falls back down here 1267, I'm not saying I'm not trying to suggest that. I don't suggest buy or sell signals, but I'm just saying is, I'll gladly pick it up. And if it slides, and I'm never like that, but I mean, if it slides 10, 15 further against me, I'm talking from a day trade standpoint, I'm not even going to be that worried about it because I know, once again, it's going to have a nice undertone bid to it, and eventually it's going to come back. At least that's how I feel because the tables are now turned on the dollar index. Let's go on into the cable. Well, here's our 2734, and the market's just, it's holding like a rock. But once again, I think that we could go on and break lower here in the cash dollar index. The cable may be somewhat restrained, not compared to the euro, but let's go with right there, 27. Already dip back down against this. It's a long ways above it, considering how the euro cable's been acting. We'll just go with it. It's a bit of a stretch here, 2782. Because if they hit that, they'll get beyond the 34, they'll hit those stops. So if we're going to see some dollar selling, if we do, we'll just go 2782. The 2734 has been working like a champ here, but if they get beyond that, that's going to blow that. Support is going to be 2652. Here's our support here, the 2678. We've come back in here. But we're going to move this up, or I should say down. $26.52. Well, we had 69.41 and the market stopped at what, 69.38. Thinking that if we do see further dollar somewhere, and that's what we're looking at potentially to close out the week, we'll go with 69.62. And let's take a look here for support. Go after 68.90. Resistance. Not really expecting a whole lot here. We'll go 66.27. If we see a lot of good dollars selling towards the end of the week, 66.27. Support. It's going to be 66.55. $65.55. And let's go into the dollar CAD. $31.36. $32.36. Pretty simple. No waste any time on that. Let's go into the dollar peso. We had this before, 1892. Obviously, if we see further dollars selling, we can push below that. If we do, we're going to go with 1886, call it 1887. Well, there was our resistance there. We had 1905. And we got to 1905. We actually had 1905.5 and it went to 1905.4. Was it? Or right at 1905. Just about. Resistance, we'll just keep that the same. And let's go to dollar yen. Man, this is unbelievable. This really come down here. I have not had a good take on this or a good feel other than, we had the 876 and that held very, very well, but I have not had a good, like a feel like, okay, this is what it wants to do today or whatever, other than just trading in these ranges. Um, if we see that good dollar sell, I'm just going to go to 676 so that, once again, not call with your pants down. At least we know where we believe where the market would go to. So 676 overall, I think that will go to anyway. And upside, $780. And let's go move into the cash dollar index. Here's that old pivot 24. The risk is that they start selling this thing, and we have some support here at 90 at 29. I think that we may have had that as our. No, we didn't. Had not at the time. We hadn't had it as our where it could go to. I think we did keep the level, the support there, but we're saying, hey, be careful. We can run down here. I think we could possibly do it today, because if we break price here, nobody's going to own this, and they're just going to run with this thing. Let's go with 96.24.06. If we go and see that on the upside, and that's a risk that they start to unleash some pretty good selling, and so you want to know what those levels are, where you think we think they may go to. 96.84. Now let's go move into the cross rates. Oh, this market is dead as a doornail. We're breaking a little bit lower. It's going to be right here at 70.51. With resistance. Right there, 70.83, 70.83 right now. And next up is the Euro Yen. As I said, moving into those safe havens, whether it be gold or euro or yen. See a nice bounce off of this, though. We'll go right there with 21.13. Going to be a pretty good stretch, but if the euro starts to move higher, but it's still going to be a tug of war here. Let's not get too greedy here. It's going to be 21.82. Next up, the Euro Aussie. And we have come back on this pair. Want to give it a little bit more room, and that's going to be right there, 63, 67. Right now, we'll go keep it pretty tight, 63.16. Boy, Euro's really making a nice little advance against the Kiwi. Well, we just got there. Can it move higher? Can we'll give it just a little bit more room here, which is going to be right there. 72.41. And support right there, 71.74. Let's go move into the RCN. This is just trying to hold near these lows here. It's just been a really tough move. We called it the death spiral. Let's go right there at 74.08. Resistance will be right there at 74.62. And moving on to the guppy. In 35.83. Resistance is going to be right there, 36.75. And let's move into the sterling odd to close this out. We're kind of all over the map on this one. We've already made it up here to the 38%. So it's going to be 83.03 on the support. With resistance coming in right there at 83.83. And just always just take a quick look here with gold. Well, 1377 on the XAU would be the 38%. One of the things we talked about, I mean, the opportunity was for this to still move higher, but that it would be, volatile in the sense that you hit these big wide ranges, and sure enough, you're seeing that. So obviously, the safer bet is to be a buyer. I mean, people trying to sell this thing. I've been in this row before, and you try and sell it, and it just keeps pushing against you. And I was even looking at it late yesterday afternoon, or not late, but in the afternoon. I go, this would be an area where I'm sure some people would say, boy, this is a good area to sell, and I'll be doggone if this thing didn't shoot up again. So it, snockered some people in, and now we've come off quite a bit from here. If you think about it, look at that, 14.12, and we're 13.90, you off $22. So you're seeing these wide ranges now with gold. If you're trying to trade this thing, I'd probably be looking at the 30-minute. Obviously, that'd be a better idea of where, but it's on a bigger plateau at this point. It's looking for big moves, although I think we've already had a pretty good run here already. May have to pare back a bit. We'll take it back to the main screen. And you can see here that the euro is staying firmly bid, and the dollar index just hanging around here near these lows. So you got to be careful with this as we go in towards the end of the session. Here's a bias chart. I'll get that posted out. And thanks for joining us here, and good luck with the rest of the day trading.